Welcome to this episode of the Michael Yardney podcast, where we explore property investment, success and money, and in general the psychology that drives that. But today I'm going to speak about demographics, because I've often said that demographic changes are going to be more important in shaping our property markets in the medium to long term than the ups and downs of interest rates or the vagaries of our economy. So I'm pleased to have again my regular guest, leading demographer Simon Kuestenmacher, back on the show. Now, Simon's co-founder of the Demographics Group, and he's a master in interpreting data and trends to forecast how societies are going to evolve, and his insights, I've found they're pivotal to anyone interested in property, but also in business and lifestyle changes. They're going to help shape your investment strategies. And today we're going to talk about what's ahead over the next 10 years and how each generation is going to experience the year 2033 or 34 in a decade. Now, together we're going to delve into demographic shifts, technological influences, and the impact that our economic policies are going to have on housing trends. Now, like all my regular chats with Simon, I think this particular conversation is going to be thought-provoking for you as an investor. So let's dive in.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Hi, Simon.
Hi, Michael. Great to be back on.
Now, Simon, you recently published an article in your weekly new daily column every Sunday about the evolving patterns of how we lived. Now, you shared your views about each generation, how we're going to experience the next decade. So I'd like to actually just go through that with you, because as a business person, as a property investor, it's really important to understand the demographic changes. So what are some of the big changes you foresee? And then maybe we can dig into how they're going to apply to each generation.
Absolutely. Generationally speaking, there are two big movements happening over the next decade. The first one is that the big baby boomer cohort is retiring. In 10 years' time, even the youngest baby boomer will be officially of retirement age. Boomers, of course, are born in the 18 years following the end of the Second World War. And that will change things. Boomers retiring are big.
We're not going anywhere, though, Simon, just to let you know.
The whole idea of baby boomers retiring means that this is a cohort retiring that changed and reinvented every stage of the life cycle they ever touched. That means if you think that retirement living, that aged care homes look the same now that bit by bit boomers will enter the territory than it did decades ago, you're massively wrong. They will reinvent this. And the sheer order of magnitude of this generation will drive massive opportunities there. But that said, overall, I'm arguing that the downsizing narrative in Australia is much exaggerated. Overall, Australians and baby boomers more than previous generations will tell you stuff like, I want to be carried out of my family home. That appears to be the main goal in life of Australians. You could argue that this is a way of downsizing, into the little box. But more than anything, we do know that the homes of baby boomers, largely relatively big 3 and 4 bedroom dwellings in the middle suburbs of our big cities, that they will only enter the housing market at scale when the younger partner of the baby boomer couple will die. And that happens to be mom, because mom is 3 years younger than dad and she has 4 years longer life expectancy. So we know that this wave of baby boomer women dying, and therefore this type of property entering the market, that speeds up year after year, and it reaches its crescendo in 2041. So really, we are about a decade out before this takes up serious speed. So the downsizing in the next 10 years won't be that big, but throughout the 2030s and half of the 2040s, this will be really big business.
So baby boomers are not moving into retirement villages or necessarily going to tree change or sea change. They're wanting to downsize right size where they live. There's room for good apartments for baby boomers. The more luxurious apartments still seem to be selling and working well, Simon, while the cheaper apartments aren't financially viable at the moment. But you said there were two changes. Before we get back onto the baby boomers and what that means, I think one of the other changes you talked about that's going to affect how we live in the next decade, you talked about in your article, was climate change.
Very much so. So on a global perspective, climate change is leading to quite a few things. There is certain growing regions across the world will shift a bit, but more than anything, certain areas will become reasonably unlivable or less attractive to live in. And so climate change will more than anything lead to human movement, to human migration. That will impact Europe, for example, much more than it would in Australia. In Australia, we control our borders. We very much are in control of our national borders, even though in recent news there is like one boat of asylum seekers arriving on the Western Australian coast. That doesn't matter. These numbers are tiny. Anyone who's making a deal out of it is just fishing for cheap votes and deserves no respect whatsoever, to be honest. These are very little numbers. And we will control our borders. So Australia is, globally speaking, in a very, very privileged position. Climate change, of course, does have certain impacts when you look at the housing market, which areas are most attractive in Australia. And of course, water management will be one of our main concerns in this country.
Well, that's interesting because as our population is going to increase by maybe 3 million over the next decade or more, the infrastructure isn't going to cope as well. So water management, having enough clean water. Who would think in Australia you'd have to wonder, are we actually going to even be able to supply water to all our population is going to be an issue. But while some people are saying too many people and it's a bleak future, I believe you think our economy is going to be able to support a very large increasing population.
Oh, absolutely. So you always want to go back to the absolute basics of what is the Australian business model. And the Australian business model couldn't be simpler. We make money by doing four things and four things alone. We sell the stuff that we dig out of the ground to the world, mining. We sell agricultural produce to the world. We entertain a couple of people, tourism, and we educate a couple of people. That's the universities, international student exports. That's all we do. From our expert dollar perspective, all of those four sectors will be thriving, even if you have a pessimistic outlook across the world. We have another 60 years of population growth left in the world, globally speaking. We probably got about 150 years worth of urbanization left, meaning people moving from rural small villages to bigger cities. And that drives up the demand for mining products because you need steel to build those cities. You need coal to power the planet. Even if coal will go down as a share of all energy usage, it'll still be sold. So Australia is well positioned there. Plus, we are electrifying the global transport network. That means you need batteries, and the stuff that you need for batteries, that all comes from mining. So the green energy future is a mining heavy future. That means that mining, in a bit of a hilarious twist, will turn into a green economy.
That's
over the
interesting.
next couple of decades. And Australia will benefit from it. The moral question is, can Australia capture enough of this wealth locally? Do we need a national sovereign wealth fund to capture the mining wealth and then spend this money on infrastructure, for example? That's the big topics that must be answered.
Well, the other interesting thing is that despite the growth that AI is going to have over the next decade and change the way we work, none of those jobs at the moment that I can understand, none of those big industries, I should say, are going to be overly affected by AI. It could well be in the background, but we're still going to need people, aren't we?
Exactly. So every now and then I hear people saying, if you look at Japan, they managed to operate a shrinking country. So you have fewer people year after year for the last 25 years, and they still grow the economy. Why can't Australia do this? Why surely Australia can do with less migrants? But people then forget that Japan operates on a different business model. Japan makes money from high-tech manufacturing and insurance. And you can do both of those businesses outside of your country. You build a Toyota factory in Vietnam and you use foreign labor outside of Japan, and you then import the profits back into the country. You cannot do this with Australian mining. You cannot do this with Australian agriculture. Tourists need to go to Australia and also
Yep.
get people to the country to be educated here. So we need all the labor that we need for our business model in the country. Plus, we are aging. Japan is also aging. We're doubling the 85 plus population in the next 13 years. That means we need to double the aged care workforce, roughly speaking. That's imported labor. If you've ever been to an aged care home in the last 20 years, you know that these jobs are being done by imported labor. So Australia will not be impacted by AI because these manufacturing advances, they don't impact us that much. It is other industries that impact us much more. Plus, we are running out of workers. That is written into the demographic setup of this country. We have big baby boomer cohort retiring on one end of the spectrum. At the other end, you have a smaller cohort entering the world of work. That's an imbalance. Over the next decade, you also have millennials continuing to make babies. That means they leave the world of work temporarily. The skills shortage is here to stay. If you run a business and you thought the last couple of years were tough in terms of hiring new staff, well, you have something to look forward to because things are going to get worse. We are running out of workers.
Now, we started off talking about the changes and how they're going to affect the different demographics, and you started talking about baby boomers. I think one of the other areas before we move on to the next demographic groups, baby boomers, is the eventual handing over wealth. That's been talked about a lot recently, where baby boomers in general own their homes with minimal debt, and many are going to pass it on. But that's already starting now, isn't it, Simon? So while there will eventually be an intergenerational move of wealth, the bank of mum and dad are helping a lot of people into the market. And in fact, now we hear more talk about the bank of grandma and grandpa. And I unashamedly say I pay my grandkids' school fees, and that's expensive.
Yeah, absolutely. And the intergenerational wealth transfer on an individual perspective is the best thing that you can do, is to become the bank of mom and dad. Because if you take roughly the current interest rates of 5.3% mortgage rates, roughly, that means a $400,000 mortgage will cost you $800,000 in repayment. There's a bit of, think of an interest rate as a poverty penalty because you don't have cash to buy that house. You need to pay the rate.
That's interesting. Never heard of it said that way.
So what that means is if you as a grandparent can give $100,000 to your kids so that they can buy a house for their family, you are not actually giving them $100,000. You're giving them $200,000 worth of benefit because instead of taking a $400,000 mortgage, they only need a $300,000 mortgage, meaning their total repayment goes down from $800,000 to $600,000. It is ludicrous the amount of leverage that you have as a parent or grandparent if you hand the wealth over while you are still alive. Plus, giving, the joy of giving, that is something, a positive feeling that you get here and now, and you might as well be alive for that positive feeling because when you're in the grave, that positive feeling does you
no good. So give with a warm hand rather than a cold hand. By the way, I'm going to make sure my kids listen to this particular episode, Simon. I know one of them does. I'm not sure the other three do. Now, having said that, the next generation of the Gen Xers, born 64 to 1981, how's they going to fare over the next decade?
So the Gen Xers are this small, forgotten generation because they're sandwiched between two big ones. They got used to being skipped when we talk about generations. But they're now in their 50s. And the 50s are the time of the life cycle in Australia where you are being handed the top jobs. All prime ministers and premiers tend to be in their 50s when they first start. So you are now high income area of the life cycle. You have high influence. From a housing perspective and from a financial perspective, though, it's not all that great as it might sound at first glance, because you still have financially dependent kids. They might be teenagers, they might be at university, but they financially depend on you. You increasingly have either financially or from a care perspective dependent parents. And if you were unlucky, you overextended your mortgage a bit during the super low interest rate phase. So in a sense, you're burning the candle from three ends in your 50s at the moment. It's a weird candle with three ends, I admit that. But more than anything, these are the people that the banks are scared of defaulting. So it is a rough decade for Gen X. Yes, top jobs, but lots and lots of pressures. Traditionally speaking, we would say that this is the life cycle, the housing life cycle where you move up, where you upgrade, where you upscale, where you get a house that's large enough so that the annoying teenager kids are, on the other wing of the house, far away from you. And that's probably not going to happen as much as it could because housing is so expensive and people do get a bit worried about their mortgage. So the upgrader market is probably a bit slower than it could have been otherwise.
Well, I guess moving forward, though, in the 2030s, when their kids leave, when their mortgage is paid off, that's going to be a good decade for the Gen Xers.
Oh, exactly. So the Gen X needs to get through the 2020s. From then onwards, all of a sudden, they are still working at decent wage ranges. They have no financial responsibilities because, quite honestly, their kids are starting to earn their own money in a decade and their parents might not be around in a decade's time. So financially speaking, good news.
Why I love listening to you and understanding these things is because as a business person, as an investor, it's really important to understand how this is going to affect how Australians live, spend, where they want to live. Demographics really does define our destiny. And the next generation, younger than the Gen Xers, were the Millennials. 1982 was when they started to come into this world, up to 1999, my kids' generation. They also make up a very big voting bloc at the moment. They seem to have a lot of say, Simon.
Exactly. And they make up the massively biggest chunk of your workforce at the moment. So misunderstanding millennials is something you cannot afford as a business. And millennials over the next decade, they have one thing in mind, and that is becoming homeowners. They procrastinated for a long time and only started making babies in their mid-30s. They reached that right around the start of the pandemic.
Well, it started earlier. They took gap years. We didn't have a gap year you had to get out there and work.
Yeah, exactly. You had a gap year, you stayed at university for just one more degree, and so you started everything later in life. But while you were procrastinating away and you already were coupled up, but you didn't have a family yet, you could continue living in a 1 or 2 bedroom apartment in a city, hip kind of suburb. That was fine. But all of a sudden, millennials are adding their 1.7 kids to the household bit by bit. And then their hipster apartment in Surrey Hills in Fitzroy becomes a bit cramped and they have to move out. They need a 4-bedroom house. And those houses are not available, or homes, because rental flats are also not available, or flats of that size are not available. And they're not available in the inner suburbs. They're not even available in the middle suburbs.
We're building the wrong stock, aren't we, Simon?
Yeah, we did. And so now that we know that all of the millennials that are still in the inner city suburbs want the 3 and 4 bedroom stock, we're building that. And the place where we can build this type of stock at scale happens to be the urban fringe. This is the extreme fringe of our cities. So millennials move from the very center of town to the very fringe of town. In the meantime, they hipsterize the growth corridors there, but it also means that they will be very reluctant to go to the office because why would they? They want to be engaged parents, so they want to spend as much time with their family. Plus, they have a really long commute now. So bosses that force workers, their millennial staff, back into the office, they fight an uphill battle, demographically speaking. But that's the main product. 3 and 4 bedroom homes. Ideally, people want to own them. If there is very little housing stock available, they will rent them. And so if you offer that type of property to the market, there will be no shortage of buyers. This will be a very lucrative, juicy asset over the next decades.
There seems to be an increasing want to live in townhouses, which is a good compromise of large accommodation on a more compact block. But if you're in the right neighbourhood where there are parks and facilities and gyms and all the the rest. That seems to be working very well for millennials, Simon.
Absolutely. And townhouses is the way that we densify the cities. The reason that there is no housing stock available in the middle suburbs where the baby boomer parents are currently living is that they are great NIMBYs. They block development wherever they could, but only once baby boomers die out of their quarter-acre block, we densify this block. But we're not building a European-style medium density because people die 1/4 acre block at a time, essentially, and you then build 3-4 townhouses on each block. And so you densify, but you don't densify it as much as you could if this was, a computer game where you can do whatever you want.
Sim City, remember that?
Oh, very much so.
Yes, you could build your own city, and if the people didn't like you,
And
they
what
voted
you
you
could
out.
do at those computer games is you just bulldoze single-story homes and you build medium density. In practice, this is impossible. If we want to densify our middle suburbs, the only way we're doing it at the moment is we find a bit of land next to a train station and we build a really big tower with relatively small dwellings in there. That's fine. That provides housing stock, but it's not the right housing stock for families.
Okay. Last generation that I guess we should be talking about is the Gen Zs, the younger ones born this century around 2000 to 2017.
Exactly. And so Gen Zs are a small generation because they are the kids of the small Gen X generation. So they are now coming of age. They are now at university. They are now your graduate level intake, your apprentices that you get into your factories and offices. That's Gen Z. They are in the rental stage and will be in the rental stage of the life cycle for quite a while. There is no other suburbs than the inner suburbs for them. That's where they live. They will start making babies probably later than millennials even. If they start families at all, they are a very, very depressed generation. They have by a long shot the worst mental health outcomes. They have a relatively pessimistic outlook of the future, even though I would argue they shouldn't. They needn't have this because they are a small generation and highly educated as well, entering the world of work in times of record low unemployment, in times of a prolonged skills shortage. They can charge whatever they want on the labor market. Employers have no choice but to hire them. So ultimately, things will work in their favor. And if we go really down into deep speculative territory, I would argue that in the long run, we will be making housing more affordable. We're talking decades, but Gen Z actually does have about a decade or two until they need housing for purchase. And so they don't need to be pessimistic. Dear Gen Zs, if you somehow listen to this podcast, please cheer up. Ultimately, things will work out for you just fine.
Thank you for that word of confidence. Now, it's important to understand how these shifts are going to affect our housing markets, our property markets as an investor, and if you're in business also to understand where your potential clients are, where they're going to live. But what about the future of workplaces? We've touched on this before. How do you see that affecting where people want to or need to live and what sort of accommodation they're going to require, Simon?
Yes, so the first top level observation is that the structure of the workforce shifts more and more towards knowledge work. So we have more and more so-called skill level 1 workers, highly educated people with a university degree that do jobs that traditionally, let's say 10 years ago, we would have thought to be taking place in an office tower. Those jobs now increasingly take place in the spare bedroom of the house. But these jobs increase. They're now making up about 35% of the workforce. This might be as high as 50% of the workforce in the future. So everything pushes towards the office type work. But working from home, of course, became a big thing during the pandemic. And I would argue that we're now moving away from fully remote work. We realize that there are so many benefits to be had if you spend some time in the office. We're talking about social cohesion, a sense of belonging, team spirit, and knowledge transfer within the firm. These things are better done in the office. The argument about you are being more productive in the office, there is no proof for that whatsoever. If somebody says that, they have nothing to base that claim on. So we can only use team belonging and education knowledge transfer as an excuse to go into the office rather than staying at home. But what that already means is it's not fully remote. We do need the hybrid model. And if hybrid is the way forward, we do know where people will want to live. Because people, if they go to the office once or twice a week, they're willing to do what we call an extreme commute, up to 2 hours. What you can do when you pick your investment destinations is you draw a 2-hour drive time radius around the CBD of your big capital city. If this area that you're interested is within these 2-hour drive time radius, you know that demand will be bonkers over the next decades. If it is outside of that, it is more difficult because then this area outside of the 2-hour drive time radius needs to be attractive in its own right, and it needs to create jobs in its own right. You cannot rely on people bringing their own jobs with them through fully remote work. Yes, we are in a sense extending the geography in which people are willing to live a bit more, but not by as much as we sometimes make you believe in the newspapers when we talk about remote work. It doesn't mean that people will move to the absolute hinterlands. It will be the extended areas of our big capital cities that will be the most attractive destinations.
Well, I think one of the other factors when you choose a location is amenity. I think that's one of the things that COVID reminded us. Also, we won't forget the importance of the third place, work being the one place, your home the other, but the ability to go to gym, to places of worship, to community centres, to parks. I'm not sure that the outer suburbs have got as big a range of amenity as the more established suburbs. And I'm wondering whether the government can afford to upgrade the infrastructure in a lot of those areas to bring in the amenity, Simon.
If you do what I do on a Saturday night, and you line up all the state budgets and the federal budget for fun next to each other, and you then look at the infrastructure spending, the states are all willing to spend on infrastructure. So there's a general willingness to pay for the stuff. But if you also know how much work is required for those infrastructure projects, you just have to giggle or cry, depending on who you are, because there is no way we can build all the infrastructure that we're willing to pay for. It's impossible. So we do know that there will be a shortfall of infrastructure. And we do know where this shortfall of infrastructure will be. It will be towards the future populations because we run a backlog of infrastructure. We run behind about 20 years, I would say. And so that means even if you were this future-minded politician that knows there's this big growth corridor and I'm building all the right infrastructure to my future populations in this segment, you cannot do it, even though this might be the cheapest way, the most efficient way of building infrastructure. You can't do it because the voters...
There's no voters there yet.
Yeah, they would kill you at the voting booths because they would prefer to have the infrastructure that was long promised to them. So we will be forever playing infrastructure catch up. So keep this in mind when you position, yourself within a capital city.
Well, Simon, I look forward to our monthly chats, and next month we're going to talk a bit more in a different way about the changes over the next decade based on a series of articles you wrote in the New Daily. If people want to keep up with you, I'll leave you a link to your weekly article, and it's not behind a paywall, so the New Daily. And also, I know you're very active on social media, so people will be able to catch up with you. I'll leave a link there as well, Simon.
Oh, fantastic. And I'm always happy to connect with anyone on LinkedIn. That's the best place to find my almost daily updates on Australian demographics.
Fantastic. Okay, catch up with you next month. Thank you.
See you next month.
I hope my chat with Simon Kuestenmacher shows you that despite all the challenges in the world, the big picture for Australia over the next decade is very positive. Of course, that's how successful property investors think. They think about where the markets are going to be in 10 years, not where interest rates are going to be in 6 months' time. Now, if you're a regular listener to this show, but you don't, or even a new one, but you don't currently subscribe to this podcast, please just stop for a second on whatever podcast app you're listening to. Just follow or subscribe so twice a week you're going to get the regular updates from my expert guests and myself. And it'd also be great if you could leave a review. Now, in a moment, I'm going to share my popular mindset message with you. But I want to remind you that Simon Kuestenmacher is going to be at Wealth Retreat on the Gold Coast at the end of April. So may I ask you a direct question? Is your current peer group really supporting your goals in taking your property, investing, your business, your life in general to the level you want to be at? I found too many Australians get stuck simply because they don't have the right peer group and the right advisor network to help get them to the next level. So here's your chance to upgrade your peer group, to get a whole level of other advisors. And as I said, Simon Kuestenmacher, Mark Burris, Pete Wargent, me, Brett Warren, Ken Race, Mark Creedon, a whole group of people, I've left out a whole lot of names, are going to be at Wealth Retreat for the best faculty I could put together, Hung Choi for finance. But it's also the other delegates that are there, and I speak to everyone who comes to Wealth Retreat, and there are some very, very successful property investors and business people there. But don't count yourself out. Please go to wealthretreat.com.au, find out all about it, and register your interest, and I'll speak to you. And if I believe you'd get benefit from it, I'll back you with my money back guarantee. It's your opportunity to meet a new peer group of determined, successful property investors. The common comment I get from people I speak to is, I don't have the right people around me. I don't have people to talk with about this. They don't understand how I'm thinking. So it's your opportunity to meet a new peer group of determined, successful property investors, business owners. But it's actually going to give you a concrete roadmap, step by step, to get to the next stage of your life. The aim of Wealth Retreat is where you're going to be in 5 years' time. You're going to learn real-world realities to take advantage of the property markets as they reset in front of our eyes later this year. So this is your, I guess, once every now and then opportunity. We only do it once a year on the Gold Coast at the end of April this year. So wealthretreat.com.au. Leave us your details, and I'd love to have a personal chat with you to help you on your wealth creation journey.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
My mindset message for you today is a little bit different. I'm going to suggest you fall inwards. Now, I'll explain what it means in a moment. I guess it's really about when things go wrong, when things are falling apart, you've got a number of options. Now, things could be going wrong in your property investment, it could be in your business, it could be in your relationships, but whatever, when you think about it, there are only three ways you can handle it. You can deny what's going on, you can deny things are falling apart, and I know a lot of us do that in relationships. I'm not here to give relationship advice. Or in property investment, you think, oh, it's eventually going to pick up. Or in business, you think, oh, it's just what's going on in the world at the moment. So you can deny what's going on, or you can accept that things are falling apart and add more energy to the same way of thinking. That's what a lot of people do. Or you can ask yourself, what's the lesson I need to learn here? The third option. The third option is when you stop running from your difficulties or procrastinating on them and open yourself up to the process of, I guess, what I'm calling falling inwards. This is where transformation occurs. In order for you to grow stronger, I guess parts of you must die. Falling inwards is the place where you go to explore your deeper self, a place where you leave your ego behind and have crucial conversations on how much longer you're willing to tolerate the pain. It's the place where you realize that you're self-sabotaging potential opportunities. It's where you realize that your property investment strategy isn't working. Maybe you bought the wrong property in the wrong location, or you're following the wrong strategy, or you're listening to the wrong people. It's where you realize your business strategy isn't going to get you anywhere. Hope is not a strategy. Maybe it's where you realize that your underlying anger for people is really based on fear. Maybe it's when you realize that the time you're spending fixing all these things probably costs you more than moving on. Falling inwards means you're coming face to face with your darkest self, and I guess it can be painful, but it's nowhere near as excruciating as being stuck where you don't belong. Sooner or later, you're going to see there's not someone out there that's causing you the suffering, but there's something within you. So this is a bit of a deeper, heavier mindset message, but it follows the theme that I've spoken with you about for years, that you've got to be the pilot of your life. Your inside world reflects your outside world. Your thoughts lead to your feelings lead to your actions, and your actions lead to your results. So falling inwards could be the scariest skydiving experience of your life, but the alternative is to fall apart. So which option will you choose? Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?